This will be my third installment on trader psychology. I want to examine the concept of controlling greed at tops and controlling anxiety at bottoms. Most people logically understand that the way to make money in the markets is to buy at low, buy at bottoms, and sell at tops. Buy low, sell high. The problem is that almost no one is capable of doing that. The reason, of course, is that without a crystal ball, one doesn't know exactly where a bottom is going to occur or where a top is going to occur. But we do know that when an asset is in an intermediate decline, usually that means price has been moving down for, more often than not, it's been moving down for more than 4 weeks, sometimes as many as 8 to 12 weeks. And if something has been moving generally lower for that amount of time, and then it's often capped off with a what I call a bloodbath phase, that's the final 5 to 7 days where price breaks a support zone and then starts to accelerate lower. That generally it so damages trader sentiment, their mental capital, that they become convinced that 4 weeks is going to become 8 weeks, or if price has been going down for 8 weeks, they're convinced that it's going to be 16 weeks, or if it's 16 weeks, it's going to be 32 weeks. You see where I'm going with this. The price action determines our emotional state. So if price has been going down, there's just, for most traders, they can't envision a scenario that would cause price to turn and move higher. But the bloodbath phase is exactly what is needed for that to happen. And by that I mean you get the bloodbath phase. At that point, everyone panics. And then you simply run out of sellers. There isn't anybody left to sell. And I would also argue that the smart money trader, an experienced professional trader that knows what to look for, if you use cycles like I do and sentiment, you're looking for that bloodbath phase, that the signals that that everybody is starting to panic, and that's the point at which you want to buy. And now you want to start looking for a turn that is coming. While most people's emotions are telling them that a turn is never going to come, if you are an experienced professional trader and you're looking for the signs and you see those signs, then you know to expect that a turn, no matter how bearish things look at the moment, you know that a turn is imminent. And so at a bottom, a professional trader, someone that has learned how to control their emotions, that's when they become most greedy. This is usually when you will see the COT reports become bullish. These the commercial traders they are professional traders. They've got a lot of years of experience. They know the signs to look for. When they see them, they become bullish and they become greedy at the exact time that most unexperienced traders are panicking and are most fearful, and the conditions are such that it is virtually impossible for an emotionally driven trader to pull the trigger. And so, those are the conditions that create a bottom, an intermediate bottom. And so, this is the point at which this is the point at which greed is good. This is where you want to unleash maximum greed. Of course, most traders, they will unleash maximum greed right here. most rallies in most assets, most intermediate rallies will last at least, most of the time, they'll usually last at least 6 to 8 weeks. And that's about how long it takes for most emotional traders to forget this. After about 4 to 8, or after about 6 to 8 weeks, the memory of this has faded enough to where now they are ready to become greedy. And unfortunately, that ends up, they end up being most greedy at the spot where they need to be most anxious. And they are most anxious at the spot where they need to be most greedy. And so now let's examine the downside of this intermediate cycle. So we've rallied here for 2 months, and most traders have become very greedy. They see the chart moving up, and now they extrapolate that this is going to continue, for many more months ahead, and so now they are ready to buy the dip. The problem is, as you can see here, this was an intermediate top, and once an intermediate cycle tops, buying the dip doesn't work anymore, not until the intermediate decline is over. So you'll get, people will buy on the first down day, or they'll buy just as soon as we get an up day, expecting price is going to turn, and we're going to repeat this rally here. And this sentiment will stay in force. It can stay in force for 6 to 8 weeks. It takes a while for the memory of this to dissipate and fear to start to set in. So it's exactly the opposite on the downside as it is on the upside. It takes a while for traders to become confident in the rally. Once they do, they become very greedy, and then once the rally tops, it takes a while for that greed to fade, and so they keep buying dips and they keep losing money until we get the bloodbath phase here, and then we get that period where everybody panics and sells, and then we get another intermediate bottom. Again, this is where you want to be greedy. This is where greed is good. You want to unleash maximum greed right here at these bottoms, and you want to control anxiety. So we're already seeing it, and like I said, very few intermediate rallies will top prior to at least 6 to 8 weeks. Well, we're only 1 month in. We're only 4 weeks into this intermediate cycle, and traders are already looking for a top right here. We saw this early last week, and the first week of the new year. We saw this in spades. Traders calling the top. Metals were rolling back over. We're already seeing predictions of sub $1,300 gold. I'm going to show you a gold chart here in a minute and show you why we probably are not going back below 1,300 anytime soon. But the reason this occurs is because the memory of this intermediate decline, which took 3.5 months, this was a very damaging decline. It didn't go down that much, but it covered a lot of time, and that time flipped the switch in traders' minds to where they became locked in the bearish mindset, and now they can't envision a scenario where price is going to turn and go back up. And then when it does, they are looking for a top. They are looking for this trend to continue. So they are anxious when they should be greedy. So again, at bottoms, you need to control anxiety. 1 month into an intermediate cycle, you need to control anxiety. It's too early to look for a top. And of course, you can see what's happened here. We are not done with this rally. I suspect this rally is going to last longer than this one did. During a bull market, most of the time, intermediate rallies will last anywhere from 12 to 16 weeks, so 3 to 4 months. During bear markets, even during a bear market, an intermediate rally will almost always last at least 2 months. So we're clearly in a bull market. So to expect this to top in 4 weeks is it's just illogical. The odds are massively against this being a top after only 4 weeks. Even if this was a bear market, the odds would be against you. And we're not in a bear market, we're in a bull market. So in a bull market, the odds are in your favor that the rally is going to last at least 2 months, and the odds favor that it will probably last 3 to maybe even 4 months before the final intermediate top occurs. And then you can see what that's going to do to sentiment. Sentiment is going to be a lot more bullish than it was here. This rally lasted 2 months, and sentiment got bullish enough during this 2-month rally to keep people hoping for 3 months until we finally got the bloodbath phase and washed out all of the buyers, setting up the conditions for the next intermediate rally. So we're going to continue to see anxiety is going to continue to rule most traders' mentality here. This was just a long intermediate decline. It's going to take at least 2 months or longer to wash the memory of this away, and then turn the vast majority of traders to the bullish side. And then once we get too many bulls, then we'll get our intermediate top, and that will set the stage for the next intermediate rally. But because we are now in a bull market, we should continue this pattern of higher intermediate highs and higher intermediate lows. And finally, just a quick look at gold. All right, so all of 2017, gold was, the metals in particular, were stuck in this basing phase, and you can see right here the kind of the top of the basing pattern was right around 1300 to 1308. We get during the rally into September, we get a very brief push up above that level, but it didn't. It came late in this cycle, and it was not able to push very far above that resistance zone before moving back below it. And then once it did, then we're capped by this level again, this 1300 to 1308 level. Prices stuck back below this level. All right, so I've kind of highlighted this. We've got this zone here between 1308 on the high side, and then we've got our lower part of this basing pattern here, and we've got this one quick move out of this basing pattern that has no sustainability and is quickly given back, and then gold is stuck again back in this box, in this basing pattern. Well, now we've got our intermediate cycle bottom, and we've got a rally that breaks out of this immediately on its first try, and then on the half cycle low bounces above that consolidation box, does not go back down inside of it, and now we are moving to the upside. So I don't know how to stress this any more importantly. At 4 weeks, this week will be 5 weeks, but still, same principle applies. At 5 weeks into an intermediate cycle, you need to have maximum greed and minimum anxiety. This is how you make money in the markets. Once we get to 10, 12 weeks into this intermediate cycle, that is going to be the time where you need to control greed and let anxiety loose. But right now is not that time. We're still early. Uh, Ideally, it would have been the point to have maximum greed would be right here. This is when we entered our positions, and we timed this with sentiment, several things, sentiment, cycles. I was looking for a bloodbath phase. I even warned people it was happening on the free blog as it was occurring. So, the signs were there. This was the point to have maximum greed, minimum anxiety, and it is still very early in a brand new intermediate cycle. There is absolutely no reason at this point to rein in greed. The gold is behaving exactly as it should. It has broken out of this consolidation box, come back down to test it, and rebounded off that. Like it touched a hot match. So there's just no need to be anxious at this point. You need to look at the market and view, look for any excuse to be bullish and ignore every excuse to be bearish. The surprises should come to the upside for the next, at least the next 4 to 6 weeks, and probably for another 10 weeks before we need to start worrying about a larger degree intermediate top.